So welcome everyone to this Later Life Lending Symposium event. Thank you very much for joining us today. We've got a fantastic agenda lined up, 3 great presentation slots filled with some fantastic guest speakers and subject matter experts. For those of you that have not joined us on a Later Life Lending Symposium event before, if you don't know me, my name's Stuart Wilson. I'm the Corporate Marketing Director at Key Group. I'm going to be the host for today and asking our guests the questions. We will try and leave some time at the very end for Q&A if you do have any specific questions that you want to put to our guest speakers. But I really do hope you can join us for all 3 events. We've got some fantastic subject matter to cover today, including marketing in financial services, which is a topic that regularly comes up as something advisors are most keen to hear more about in terms of how they do better and more effective lead generation. We're also going to be talking to Deloitte later on today about regulation, in particular in the later life lending space. But I wanted to start today by talking about the growth in opportunities in this marketplace for advisors and intermediaries, and particularly those that are looking to get into this market and maybe considering the first step on that journey is referring clients into a specialist or working with specialist advisors to help develop their own later life lending propositions. And to help me explore that subject, I've got Jason Roos, who's Business Development Director at Key Group, and also Steve Humphreys, Proposition Director at MAB,
Hello,
Mortgage Advice Bureau. Thanks for joining me today, both of you. Jason, if I could start with you, we've known each other for a number of years now, working on the key partnerships, the referral arm of Key Group. So just before we get into that, because I've got some questions I want to raise on that, just a little bit sort of potted history, if you like, of your background and how you got into the key partnerships world and Key Group.
Yeah, no problems, Stuart, no problems. So I won't start 33 years ago where I did start. So I did 20 years at Legal & General in various distribution roles, always in distribution roles. And then the opportunity came to move to Aegon, who are obviously a very large insurance company. So I went there for 7 years. And then 5 years ago, actually, just 5 years just gone, actually, the opportunity came up to join Key in the equity release market, which I hadn't been involved in for probably 15, 20 years before that, really. And I just felt it was a really interesting market to get into. So I came in initially, as you said, sort of running our key partnerships referral proposition to sort of help those advisors that want to look at the market, but don't necessarily want to provide that advice right now.
And those last 5 years since you've joined, and that's been quite a transformational period in the equity release space. If we just take key partnerships as an example, more than 8,000 intermediaries now signed up to key partnerships. I think last year completed or issued business around about £130 million of lending issued through that channel. So a significant number that would put key partnerships quite close into the top 10, certainly, if not the top 5 of distributors in the UK. Yeah. So what in your opinion, what's been behind that growth in this market?
Well, I think that, from a client customer perspective, I think people's main asset in most cases will be their housing wealth, and I think over the last sort of 5 years within the key partnership team that we've got is around really sort of working with the networks and the mortgage clubs to really help them understand that opportunity and how it can help their clients in later life. Because as we know, property wealth for the over 55s is in excess of £1 trillion. My calculator from school actually doesn't have enough zeros to actually do that number. I still use. But I think that the reality of it is
you did have a calculator at school.
Well, it's an abacus.
You're an abacus, yeah, I was going to say.
Yeah, okay, but it's sort of done a job, a similar job. That definitely didn't have enough beads, so that was the issue. But actually, we've been out there talking to advisors and just making them aware of that opportunity for those customers who are, I won't say going into retirement, because I'm not sure people generally have a set date they're going to retire anymore. I think people phase into different segments of later life, and maybe because of some of the changes in their circumstance, they want to release money from their property wealth, their housing wealth, but not necessarily for them. It might be for a family member or something. So I think we've just constantly had that messaging out to advisors around, look, if you're not qualified in this market, then it doesn't mean you can't access this market and you can't help your clients with this market. You know, it's about really making your clients aware that you can help them. Because I think that's the worst thing if you're a client of an advisor that actually they don't know that this is something that you can help them with. And actually, if you make them aware of that, then you know that means that you can actually increase your proposition to them by possibly using a specialist rather than doing exams yourself.
One of the things I find fascinating, again, just using key partnerships for a moment as an example, according to Key, the typical equity released by an average equity release client in the UK is something around £86,000 across the UK. Through Key Partnerships, we've noticed that figure is significantly higher. So clients coming to Key Partnerships through a referral, through an intermediary, typically releasing almost £30,000 more than that, around about £115,000, £116,000 as an average. Why do you think that is? Why is that so much difference between the typical equity release client and one that's coming through a referral channel?
I think that, you know, the client that probably deals with an intermediary has probably, you know, in a lot of cases probably got overall more wealth. So because of that, you know, the average amount that they want to release is their property is going to be worth more. So potentially they want to release more. So I think it's just that, you know, in the market that we operate in, and if you think back to RDR, if everyone remembers RDR when that came around, you know, there was a lot of change to how people dealt with their customers. You know, everyone had to go through a big exercise of segmentation, looking at, you know, what clients, you know, they're going to deal with and what clients, you know, maybe it's not a client they're going to deal with anymore. And so what that meant is that probably a lot of the clients that actually from an intermediary perspective that's now being looked after are clients who are probably of a wealthier situation and maybe want to be in a place as well where, you know, they're looking at using their housing wealth instead of other assets that they've got, because of the fact that there might be tax implications of using those assets. You know, so I think it's for those sort of reasons that we do see a higher case size from sort of wealth managers, IFAs, intermediaries overall, because their sort of clients are probably in a slightly wealthier category than we would see generally in the market.
Thanks, Jason. And Steve, I'm going to turn to yourself, Proposition Director at Mortgage Advice Bureau, MAB. Just like with Jason, just give a sort of brief introduction to your journey there. And a secondary question, there's been quite a long-standing relationship between MAB and Key Partnerships on the referral side. How important is that in terms of aligning to a specialist in the referral elements of MAB's business? You talk about that.
Okay, so clearly I'm not anywhere near as old as Jason. So I've not been in the industry quite as long, but nearly 30 years. I started as a financial advisor in the 90s. And then realised that my role was more in distribution and probably sales management more than being an advisor, unfortunately for me. So I've worked with various companies over the years. I was a share dealer in the city for a few years, the early 2000s, then I was with Barclays for 5 years. Then more recently I was with Openwork for 10, 11 years, up to about 2015 before I joined Mortgage Advice Bureau. MAB, you know, we are always looking to expand our proposition in different areas, and the MAB Later Life thing is just one of those areas that we'll come on to obviously later on. But but we've been working with the guys at Key for 10, 12 years at MAB. And I think one of the things we recognise is a good advisor can't do everything themselves. You know, as Jason was alluding to earlier, you can't be a good advisor and do everything yourself. It's just too difficult with regulation and compliance, T&C, and everything else that we have to do. We've gone down a route now to ask advisors to try and specialise in certain areas. So if you're a mortgage advisor, be a good mortgage advisor. You know, if you're a wealth advisor, even in wealth, you know, we've got good investment advisors or pension advisors. I'm not saying everyone has to just pick one area, but trying to do mortgages, protection, GI, investments, pensions and equity release is so difficult in the current climate. So even back then we decided that equity release was going to be a referral opportunity through Key. Specialist advisors, specialist systems and controls in place, giving really good customer outcomes, which is something that our guys couldn't do part-time, if that makes sense.
Yeah, absolutely. And just picking up on the point you made there, MAB Later Life. So this was an initiative announced, just over a year ago?
Just over a year ago, yeah.
An alliance, partnerships with Key Group. Can you just explain a little bit more about that initiative and the future direction of that?
Okay. So clearly, we were referring a large number of cases through the Key proposition.
Absolutely.
And one of the things we wanted to do was to say, with our MAB appointed rep firms, our AR firms, to say, look, if you want to start doing equity release, you can. There is a way that you can set up an AR firm under Key via an MAB Later Life proposition. So we went into this, what we call collaboration agreement with Key, which brings MAB Later Life to the market. We are growing that proposition every day, every week at the moment.
Yeah.
So it gives mortgage businesses a specialist distribution network for equity release or later life lending products as such. So we use the power of MAB in the background with lead generation, marketing, advertising, support in all those areas, and backed by all the T&C compliance, governance oversight, and the really good knowledge and skill and technology that the guys at Key have.
Yeah.
So we're bringing the best of what is probably the best equity release broker in the market with Key, to the best mortgage business in the market, which is MAB, and bringing them together to bring MAB Later Life.
Fantastic.
Yeah,
So
it's been a good journey.
Lots of positive signs in this industry. More advisors looking to get into this market, and that's a driver behind the growth and development of MAB Later Life. Jason, I just want to pick up on that point, if we can. In the research that Key Partnerships has done called Introducing the Introducers, and for anyone who's keen to learn more, we do have copies of the research on our registration desk just outside the room there. But just to pick up on a couple of the points that's come out of that research, 68% of advisors we spoke to said that they expect their business in the later life lending space to grow, and some of those to a significant extent over the next 5 years. And 2/3 said they intend to continue to refer. I just wondered if you could just expand on some of that in terms of the avenues for growth, because there are lots of different types of advisor out there, aren't there, from the mortgage broker to the generalist IFA, retirement planner, wealth manager. How do they and how can they use equity release in order to deliver better outcomes for their customers?
Yeah, and that's a good question actually, Stuart. And we do see people from various industries, not just from typical financial advisory markets, who are interested in the market. We see estate planners who are obviously providing that, estate advice, who want to look at whether or not, there's something that they can have a conversation and help the customer with regards to their estate planning, and equity release is being used as part of that conversation. We see wealth advisors who obviously have got customers who maybe have got a very significant defined contribution pension, and because of the IHT rules around pensions on death, they don't actually want to use that pension. They want to use property wealth instead. So we've seen we've seen a significant growth in a whole host of different areas around the market. Estate agencies using it around people who actually put their property on the market of an older age group and actually say, I really want to sell this property. And then 12 weeks later, when it comes to the end of the period that they have the agreement on, they're saying to them, well, you haven't accepted an offer. But, you're saying that you want to sell this property, but you haven't accepted an offer. And then the listers, we've had listers who have had the conversation around, well, do you really want to sell it? And no, actually, I don't. I actually want to stay in my home because, people talk about houses, but actually, this is someone's home. Somewhere where they've got all their memories, where they've maybe brought their family up, and where they live next door to their best friend or whatever, and they don't want to move from there. So, we've had people that have said, well, actually, there's a way of you actually raising money, but actually staying in your home. And, we hear some fantastic stories about people who have raised money for different reasons. I remember one around a grandfather raising money for a grandson who wanted to go to pilot school. And he was able to give him money for that. And so I think there's, if you look across all the different segments, so, we talked about wealth, talked about IFAs, estate planners, you've got solicitors. Sadly, the over 60s is one of the biggest growths for divorce. It's affectionately known as the silver splitters, and so consequently, I think it's true. Look it up, Google it. And the reality of that is that if you are splitting up, maybe one wants to buy the other one out, and they want to stay local, because they don't want to move miles and miles away. And because equity release can be used for house purchase, which, you know, a lot of people don't know, actually I think for the key market monitor in the first quarter, and I don't know if anyone's ever seen the key market monitor, but it's definitely worth, something we issue every quarter, definitely worth getting a copy of. We saw a 350% increase in people using equity release for property purchase. So I guess it's just about making sure from a client engagement perspective, it doesn't matter what area of financial services you're in, that you actually make sure your client is aware that it's a proposition that you have. And, you know, even if it is a referral, because I think the other problem is otherwise, you know, they don't know all the facts, do they?
No.
And that's the thing that concerns me, is the client doesn't know, where it can help them.
I think, as we were saying earlier, you know, advisors generally, not always, generally like to specialise in one area.
Yeah.
They're really good at one type of business. Not always, but mainly. And in the current climate, you know, client acquisition, you know, keeping hold of that client, gaining the client in the first place is expensive, depending on where you're buying leads or referrals or whatever else.
Yeah.
But then keeping that client is really, really important. And I always say to our new firms and advisors that join us, it's not about what you can do for the customer, it's about what you can facilitate for them.
Yeah.
So whether it's you referring them to an equity release specialist or a protection specialist or an investment specialist, it doesn't matter. You know, they will always come back to you as that centre point of influence for information. And if you can build that profile with your customers and your client bank, that's more important than actually doing something yourself or sending them away because you can't do something, if that makes sense.
And just to add to that, like I said earlier, with RDR, I think more businesses have done that. So they might specialise in one area, but they have trusted partners that they use for other areas of their business. And, you know, I don't see that declining. If anything, I see that, you know, just continuing, if not growing, because I think, like you say, Steve, absolutely, you know, I'm a really good mortgage broker. I'm really good at that. But I've got a client who really needs some tax advice. So actually, I'm going to talk to someone I've made a relationship with.
There's nothing wrong with that, is there?
No, absolutely not.
There's nothing wrong with saying to your customer, that's not really my area of expertise. You know, someone else I know who I trust and will refer you to do that for you. You know, I think the customer would appreciate that because you can't be expected to know everything. That's the hard part of these.
And I also think, just adding to that if you have got a trusted partner, you know, that is great for that client, because when they see the trusted partner, because you've referred them, straight away they're thinking, well, I trust this advisor, because that's half the whole piece around having an advisor, is that trust element. I know it's with my advisor because I trust what he says and the advice he gives me. So straight away you're in a much better situation with your client, because you've already put someone across that they actually trust.
It's really interesting. You've both used the word trust there and bringing that up. We've talked a lot about the opportunities for growth, the real positive boom and growth in this market. But what do you think are the key barriers to more advisors getting involved in the later life lending market? What are the things that they worry about in terms of the conversations that you both, I'm sure, have had with advisors in recent times, and how do they overcome those barriers?
I think one of the biggest barriers we have at the moment is advisors dipping in and out of the market, i.e., you know, let's say, for example, you know, we have at MAB, we have over 1,800 mortgage advisors. What we don't want, and they don't want, is to be writing 7, 8, 9, 10, 15, 20 mortgages a month, and then to be writing one equity release, one later life case every now and again. That's just dangerous for the advisor, for the customer, for the business, and everyone else. So, you know, as we all know, the FCA are looking at this industry quite closely at the moment, which is obviously a concern for all of us. However, I don't think it's a concern if the advisor has the right knowledge, skills, and the right system and the right approach and the right governance and oversight to do this role properly. I think the danger is, like I say, is if an advisor wants to do an equity release case once every 2 or 3 months, where they don't know the lenders, they don't know the products that well, suitability is questionable sometimes. So having someone that's not dipping in and out and dabbling is the key part to this. Focus on it, being a specialist, having the right governance, oversight, systems, controls in place, and making sure the customer gets a really good outcome. That's the important part for us.
Yeah, no, I'd agree with that. Yeah, I think that, you know, I think barriers to get into the market is, you know, you see it as an opportunity, but how do you get into that opportunity? You know, how good are you at marketing yourself? You know, how good is your business? You know, I see I go to lots of events. Well, I did used to go to lots of events like this. You know, obviously most of the events now, I was actually surprised I was able to talk to anyone today, because I thought I probably needed a screen around my head to put my head through, like a Zoom meeting, because that's the only people I've really been talking to. But I think that, you know, they want to have that, you know, the confidence to understand the market, but also, you know, how do they attract those customers? It's a bit chicken and egg, isn't it? So I know equity release is a good market, but actually, how do I actually get into that market? How do I actually attract clients? Now, actually, most clients, you probably have in your client bank already. I mean, with modern CRM systems, I mean, when I started 33 years ago, a modern CRM system was a grey thing in the corner of the office, which was a filing cabinet. And most of the things were brown files, and you'd sort of work your way through them. Now with CRM systems, I was with an advisor before COVID. I asked him how many clients he had over the age of 65, and about 35 seconds later, he told me he had 2,500. So, you know, but do you make your clients aware that actually, so how do you get your marketing strategy right? How do you get your website right? And, you know, and all those kind of issues to actually enable you. So that, you know, do I make that step into the market? I don't know how good it is. I might get the odd inquiry, but actually, how do I make myself go full time into that? You know, and how do I approach that? And I also think that for advisors, that because they're not used to the market, you know, do I take that leap of going into that market? You know, am I nervous? Have I got the confidence to do it? Yeah. You know, have I got, you know, I might have done the exam, but actually, do I need more than the exam? Do I need some actual exposure to an equity release sale? And I know at key partnerships, you know, prior to COVID, if an advisor wanted to come out on an appointment, and we still do it with Zoom now, you know, where an advisor can actually attend the appointment as well. Because again, you know, if they want to have a look at how we do it as a specialist, then maybe that'll help them get into the market later on. And I'm sure it'd be the same for, you know, for MAB as well, yeah.
You know, we've got a great marketing team. Yeah. We provide advisors and firms with, you know, social media accounts, websites, as many leaflets or brochures as they ever need for introducers and themselves to promote themselves, promote their business. Yeah. And that's the hard part. It's knowing where to start, as you were saying, you know, because when you're starting from a blank canvas, to build that profile, that marketing collateral, those social media assets up from scratch is really hard. You know, so we've got a raft of material that we can use for introducers, for advisors, for firms, whatever they need. We're ready and
I think the other thing I was going to say is, you know, is the mortgage club or the network you're with, you know, what are they doing to support you? You know, so we have seen a lot of change in that in the last year or so, with a lot of the networks and mortgage clubs really starting to focus on that later life and really trying to help their advisor population get into the market.
The biggest bit of feedback we get, and I'm not going to mention any network names, some networks are wealth networks trying to do mortgages or equity release. Yeah. Some networks are mortgage and equity release networks that are trying to do wealth. You know, that's where most businesses sit in the current climate. So, you know, from an advisor, from a business perspective, am I with the right network that's going to help me and support my objectives, goals, aspirations as a business? Yeah. Whether it is equity release or mortgages or wealth, whatever it is. If it's not, it's not. But that means that, you know, you need to look elsewhere for other propositions that can support it. And networks are changing. The market's changing when it comes to whether their drivers are mortgages, protection or wealth, etc. And networks are changing. So, you know, is the advisor, is the business with the right host is a key question, I suppose.
So the topic of marketing you just touched on there, as I said right at the beginning, always a fascinating subject that advisors want to know more about, and we do have a session coming up immediately after this to talk about that. So we will explore that. For those of you that are really interested in that element of your business, we'll explore that in more detail.
That'd be Jason, a proper expert talking about it rather than us.
But Jason, one final point, if I may, before we break for Q&A. Just going back full circle now to the Introducing the Introducers report. 41% of advisors said that they referred equity release clients because it helped them to help clients that they otherwise would have had to turn away. And 39% said they did this because it helped them offer a wider range of services. I think what perhaps those statistics help to underline now, and interested in your views, or both of you actually, in terms of how important equity release now is becoming, and property wealth actually is becoming, as part of an holistic retirement financial plan. Would you agree with that? What's your views on that?
Yeah, no, absolutely. I mean, funny enough, I was talking to my advisor about it recently. Actually, I know I look old enough, but I'm not 55 yet. But we were talking about it because of my pension provision. You know, he's managing, and just about how to, you know, from an IHT perspective, you know, how is the best way to use all my assets when I get to that time that I want to start phasing, not retirement as I said earlier, but phasing into later life. You know, so I think advisors now are becoming more attuned to the fact that, because I think previously, you know, from my experience, a lot of assets are held on platforms, you know, and property wealth isn't, you know, an asset that you hold on a platform. So I think a lot of the time previously, it's not been forgotten about, but it's not been considered as much. But I think now, you know, more clients are sort of sitting up and getting that advice from an advisor that says, look, you know, your property is actually your largest asset. So actually, how can we use that in conjunction with your other assets from a tax perspective now, but also from a tax perspective when sadly you maybe pass away? You know, so I definitely think that, you know, talking to advisors in the market, as I have been over, you know, the last 5 years, more and more people are sort of sitting up now saying, do you know what, I hadn't really thought about property wealth, or I hadn't even considered it, because it's just not something that I'm in day-to-day involvement with. But now I'm actually having, you know, many conversations about it.
And I think customers' views are changing as well on property wealth.
Yeah, that's a good point.
You know, the good old days of paying your mortgage off, living in your property till you and your partner, your husband, wife die, and then leaving that property wealth to your loved ones.
Yeah.
I think those days are starting to phase out. You know, the amount of queries we get now on a daily basis of people saying, I'm not worried that I'm going to take a loan on my property. As long as I can live in my house and I can own my own house, that's fine. But I don't want to make any repayments on it, which you can or cannot do, as you know.
Absolutely.
But I want to use that wealth. I want to give it to my loved ones now, and I want to see them enjoy it. I want to help them get on the housing ladder. And sometimes that does mean a conversation with an extra release specialist and a wealth advisor to understand IHT implications, because there are
maybe
IHT
a tax consultant as well.
And a tax consultant possibly.
Yeah.
You know, and actually, if the client survives the right length of time, it can be a really good IHT planning tool as well.
Yeah.
You know, that's not always the reason for doing it, but it can be a good tool for that.
But I think you make a really good point about, you know, people do want to see the benefit of their, more and more people now want to see the benefit of their money being gifted while they can see it being used.
Yes.
You know,
I think the old days of taking debt into retirement was always a no-no.
Yeah.
But I don't think it is these days.
No.
You know, I don't think people mind having debt in retirement. I think it's just life. You know, and if you can help your loved ones out on the way, then why would you not? You know?
Yeah, I totally agree.
That's a fantastic place to finish that conversation. Thank you both for your inputs there. We'll invite questions. We've got just a couple of minutes for questions. I do have one just to start us off. It was raised by an advisor who couldn't be here today, wanted to register but couldn't attend the London event. And they were asking, or the question they posed, they've been referring for a number of years. They've seen clients get a great outcome as a result of that. They're now thinking about advising themselves rather than just referring, but they're not sure what's the best next step. What do they do next? Quick sort of overview from you, Jason.
Give Steve their number. That would be great. You know, we can. No, but I think it's about, you know, obviously if they've not got an exam, so, you know, firstly, you know, get that exam underway.
That's the first thing,
There's a lot of support. There's a lot of support in the market around exams. A lot of the lenders provide courses so you can get help with studying for the exam. Obviously, if you want to look at, you know, sourcing systems, obviously Key have got Air. You know, will be, you know, obviously I'm not going to sit here and not say that, but, you know, get the sourcing systems and make sure that, you know, you've got your marketing, your ideas around marketing. You know, obviously from Key Partnerships we have various marketing collateral. If you look at someone like MAB, they've got significant marketing collateral, and really just, you know, really get yourself on that journey. I think, you know, you're going to learn along the way, aren't you?
I think the key thing is to partner yourself with a business that's going to give you that support, that hand-holding with the marketing, but the knowledge, the skills, the oversight, the system, so that you can't make a mistake. You know, and that sounds really quite, I'm trying to dull that down too much, but because every customer is potentially vulnerable as far as the FCA are concerned. So you need to make sure you're partnering yourself with a firm that can hold your hand all the way through the process, through an induction process, through an ongoing training process, and make sure you're giving the customer that really good outcome. So that's the really important thing. Do research on networks, firms, businesses that offer this sort of service, and make sure they're going to hold your hand all the way through the process.
Yeah, that's a good point. Actually, make sure you get that support. Because that's really what you need to help you grow your business.
I wouldn't want to go back to being an advisor and try and do actual release on my own.
No.
It's really hard, really hard. No, it's easy to do and easy to get wrong.
Yeah.
It's hard to get it right.
Yeah, that's a good point. Yeah, really good point.
Any questions from anyone in the audience before we wrap up? If not,
residential buy-to-let or DA through another firm. If I was interested in joining MAB, would I still be able to flip between the two?
In theory, yes. In theory, however, the proposition that we have is really designed for people to be specialist full-time equity release advisors. I suppose it would depend on, it's a good question, but it would depend on how much time is spent on one versus the other. But look, absolutely we can have a discussion. Yeah, it can be done with some caveats around it. What we don't want, as you can appreciate, is we don't want advisors coming to join us to do equity release, but doing one equity release case every 3 months and then doing other stuff, mortgages, residential, commercial, or anything else around that. That's not what our proposition is set up for. If it's a bit of a hybrid 50-50, depending on volumes, etc., and the number of cases, we're not even worried about the production level in pounds. It's about the number of customer outcomes that are being given regularly. Does that make sense? Absolutely, we can have a conversation about it, yeah, of course.
Yeah, and I think it goes back to what we said earlier, just about that. I use the word dabbler. I'm not saying that, but you are, but I'm just saying I use that word dabbler because I do think, when I came in 2016, there was 37 products on the market. There's now about 770. So that's significant. And if you're not doing it on an ongoing basis, even with a great sourcing system or whatever, if you're not doing it, you're not going to be up to speed with how you should approach it. And actually the outcomes that you're trying to achieve for the customer might be more challenging because you're not so aware of how the product propositions are moving on. So it is just, it's getting that balance, isn't it? It's getting that balance right.
thank you very much, ladies and gentlemen. We'll leave it there. But thank you to Steve and also to Jason for joining me today. And thank you for attending. We look forward to seeing you at the next session, which will start in just a few moments' time. Thank you very much.
Thank you.